The dopamine casino. How your brain gets addicted to bad trades. A day trader makes $2,000 in 10 minutes. His brain floods with dopamine, the same chemical released by cocaine. He feels invincible. 6 months later, he's lost his house, his marriage, and his sanity. This isn't a story about greed. This is neuroscience. Your brain doesn't understand the difference between winning a trade and winning at a slot machine. Both trigger identical neurochemical responses. Both create the same addictive patterns. Both destroy lives with mathematical precision. Today I'll show you how trading platforms have accidentally created the most sophisticated addiction machines in human history. By the end, you'll understand why your worst trading days feel better than not trading at all, and how to break free from this billion-dollar psychological trap. The neurochemical trap. Let me tell you about Marcus. Real trader, fake name. He started with $10,000 and a simple strategy. Buy low, sell high. For 3 months, everything worked. Small wins, steady growth, growing confidence. His brain was learning a dangerous lesson. Every winning trade released dopamine in his brain's reward center. The bigger the win, the bigger the hit. But here's what Marcus didn't know. His brain wasn't just celebrating success. It was forming an addiction. Dopamine isn't a pleasure chemical. It's an anticipation chemical. Your brain releases it not when you get the reward, but when you expect the reward. That's why checking your portfolio every 5 minutes feels so compelling. Your brain thinks the next refresh might bring that dopamine hit. Neuroscientists have studied this exact pattern in gambling addicts. The anticipation of a potential win creates more dopamine than the actual win itself. Trading apps have accidentally recreated this same psychological environment. Red and green numbers flashing on screens, instant gratification, unpredictable rewards. The scary part: your brain can't distinguish between skill-based investing and pure gambling when dopamine is involved. The slot machine in your pocket. Trading platforms look nothing like casinos, but they function exactly the same way. Both use what psychologists call intermittent reinforcement schedules. Sometimes you win, sometimes you lose, but you never know which time will be the big one. This creates the most addictive pattern known to behavioral science. Rats in laboratories will press a lever thousands of times for random food rewards. Remove the randomness, they quickly lose interest. Make every press deliver food. They press just enough to survive, but make it random, and they'll press until they collapse from exhaustion. Your trading account is that lever. Every time you open your trading app, you're pulling a slot machine handle. Will today be green or red? Will this trade be the one that changes everything? Your brain doesn't care about your strategy or analysis. It only cares about the next potential dopamine hit. Marcus discovered this pattern the hard way. His small, steady wins weren't enough anymore. His brain demanded bigger hits, larger position sizes, riskier trades, more frequent transactions. He wasn't trading anymore. He was chasing a neurochemical high, when losing feels like winning. Here's where trading addiction gets truly dangerous. After enough exposure to this cycle, your brain starts treating losses as entertainment. The emotional intensity of a losing trade actually feels better than the numbness of not trading at all. Think about your worst trading day. Heart racing, palms sweating, watching thousands disappear in minutes. It was horrible, but it was also exciting. Your brain released stress hormones, but also dopamines. The anticipation that you might recover those losses created the same neurochemical response as a potential win. This is why traders often describe their biggest losses in vivid detail, but struggle to remember their boring, steady winners. Emotional intensity, whether positive or negative, creates stronger memories and more addictive patterns. Marcus told me his worst trading day was also somehow his most memorable. He lost $8,000 in 4 hours, but he felt more alive than he had in months. That's not trading. That's addiction masquerading as investment strategy. The professional's secret. Professional traders at major institutions don't face this problem, not because they're stronger people, but because they've systematically removed dopamine from their decision-making process. Elite trading floors are boring places. No flashing lights, no celebratory bells, no emotional reactions to wins or losses. They treat trading like assembly line work. Mechanical, systematic, emotionless. They use position sizing rules that prevent any single trade from creating significant emotional impact. They automate entry and exit points to remove in-the-moment decision-making. They measure success over quarters and years, not minutes and hours. Most importantly, they never trade their own money. When your personal wealth isn't on the line, your brain's addiction circuits stay offline. Breaking the dopamine cycle. You can't eliminate dopamine from trading, but you can redirect it. Instead of seeking dopamine from individual trades, successful traders learn to get their neurochemical rewards from process adherence. Start by gamifying your discipline, not your returns. Create a point system where you earn rewards for following your rules, regardless of whether trades win or lose. This slowly retrains your brain to seek dopamine from the right behaviors. Set artificial delays between decision and execution. Professional traders often wait 24 hours before entering positions. This cooling-off period allows rational thought to override emotional impulses. Track your emotional state before every trade. Rate your excitement level from 1 to 10. Research shows that trades executed at high emotional arousal levels significantly underperform those made during calm, rational states. Most importantly, never trade money you can't afford to lose. When your rent payment depends on your next trade, your brain shifts into survival mode. Rational analysis becomes impossible under that kind of pressure. The addiction economy. Trading platforms profit from this addiction cycle, even if they don't explicitly design for it. More trades mean more commissions. Higher emotional engagement means more active users. The business model inadvertently rewards psychological manipulation. Some platforms have started recognizing this responsibility. They're adding cooling-off periods, position size warnings, and emotional state check-ins. But the fundamental structure remains unchanged. Instant access to leverage positions in a visually stimulating environment. You need to take responsibility for managing your own dopamine exposure. No platform will do this for you. The recovery framework. Breaking free from trading addiction requires treating it like any other behavioral addiction. Acknowledgement comes first. Admit that your trading decisions are influenced by neurochemical responses, not just rational analysis. Replace the addictive behavior with healthier alternatives. Many recovered trading addicts find success in paper trading, where they can satisfy the urge to trade without risking real money. Others redirect their research energy into long-term investment analysis. Create barriers between impulse and action. Remove trading apps from your phone. Use a separate computer for trading that requires effort to access. Make bad decisions inconvenient and good decisions automatic. Find accountability partners who understand the psychological aspect of trading. Most trading communities focus on strategies and market analysis. You need people who can recognize when you're chasing dopamine instead of profits. Marcus's ending. Marcus eventually recognized his pattern, not after losing his house, but after a moment of clarity during a winning streak. He realized he felt just as anxious after profitable days as losing ones. The money wasn't the point anymore, the neurochemical high was. He took a 6-month break from trading. When he returned, he implemented strict rules. No more than 3 trades per week, no position sizes larger than 2% of his account, and mandatory 24-hour cooling-off periods for any trade larger than 1%. His returns improved dramatically, not because his analysis got better, but because his psychology got healthier. He stopped fighting his brain's addiction patterns and started working with them. Your brain will always crave dopamine. That's not a flaw in your psychology. It's a feature of human neuroscience. The question isn't whether you'll seek neurochemical rewards. The question is whether you'll get them from disciplined investing or addictive gambling. Trading platforms have created the most sophisticated addiction machines in history, not through malicious intent, but through technological advancement that outpaced psychological understanding. Every notification, every real-time update, every instant execution feeds the same neurochemical pathways that destroy problem gamblers. But awareness creates choice. Once you understand how your brain responds to trading, you can design systems that work with your neuroscience instead of against it. Stop trying to eliminate emotion from trading. Start redirecting that emotional energy toward discipline, patience, and long-term thinking. Your brain will thank you, and so will your portfolio. What's your most addictive trading habit? The one that feels exciting even when it's destroying your returns? Share it in the comments. Recognition is the first step toward recovery. If this opened your eyes to the neuroscience behind your trading decisions, subscribe to Behavioral Alpha Insights. We decode the psychology that separates winners from losers. Next time, we'll explore why your best trades predict your worst losses, and how overconfidence creates the most expensive mistakes in investing. Remember, in markets driven by mass psychology, understanding your own mind becomes your greatest edge.